my name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. As is usual at this time of year, I stop looking at my daily charts and instead concentrate on the longer term view, using my weekly, monthly, even yearly charts. If you'd like to discuss any of these, I'd only be too happy to hear from you. So let me now introduce today's longer term chart.
Today I'll be looking long term at cable, aka sterling against the US dollar. Now, I've repeated the following in my annual reviews of cable for many years now, and I quote, "I've written for many years how the long-term bullish shift pitchfork from 2007 to 2014 has been running this pair," end of quote. Well, not so anymore. I have now downgraded this bearish pitchfork, preparatory to retiring it completely. The initial break to this pattern happened back in December 2020 with the market breaking up over the upper time. However, soon after, prices tried to effect a repair, dipping below the broken upper time and into the sharp V-bottom seen in late 2022. Yet, as is the nature of V-bottoms, we saw a pretty sharp rise back up and over the upper time again in early 2023, which went on to form a 2023 to date dark blue highlighted bull channel, and that's currently 124.73 to 135 even. And this is where it gets interesting, as this bull channel can be seen as the handle or extension to the V-bottom, much as we've seen in Eurodollar. The difference here is that the handle is pointing higher instead of sideways, and it's more organized within a bull channel pattern. That is the first similarity to Eurodollar on this monthly chart here. The second is the large 2016 to 2022 cat's ears pattern. On this pattern, I commented this time 2 years ago when I said that this pattern was, and I quote, much like Eurodollar. We have the possibility here for the action from 2016 to date to be a cat's ears pattern. There's an earlier phase of construction than the one in Eurodollar, end of quote. In April 2022, the market broke back down through the broken upper time and extended the move lower towards the base of the cat's ears pattern at 114.09. In September 2022, prices broke lower still, below this neckline and down towards target X for this pattern at 86.10. However, the market stalled at the 1985 low at 105.24 and instead formed a V-bottom over late 2022. I said last year about this potential below, and I quote, "Firstly, target X for the cat's ears pattern is a long way below in the 86.10 zone. This may take more than many a lifetime to reach, but it's still there. Secondly, the all-time low at 105.22 from May 1985 is below. This was breached back in September of last year, but the reversion was enough to send prices back up to test the upper time again. Additionally, there was no monthly close below it," end of quote. I also added at the time, and I think this is an important point to note, I also added, and I quote, "Now I have some issues about this low, as though my charting system indicates that the low back in May 1985, I was also in the market at the time, and I distinctly recall prices over the weekend when the low was formed stretching down to 103.25 and unofficially trading at parity," end of quote. Finally, I would like to reprise my comments about the V-bottom from last year when I said, and I quote, "It all now very much depends on what happens with the final development of the V-bottom as we've seen in 2022. If prices hold at the broken upper time, then there very much is the opportunity for a further move lower, assuming of course that the market does not form an extension or shelf. That in turn becomes either a bull flag or a pennant," end of quote. Well, the shelf or extension has indeed been formed, but it is the unusual shape of a March 2023 to date dark blue highlighted bull channel, which is where we are now. Okay, so given the action in Eurodollar, the pressure should be on for a possible break below the dark blue lower bull channel, which is an attempt we're seeing this month. Though it has not happened really as yet, and I'll not preempt this move lower, though I will also not retire target X below. However, I will meet the potentials below halfway, in that This is not a target, but should prices break down below the lower bull channel line, then we will have a full potential on the downside from the bull channel down to the 114.75 zone. In the way is the 50% Fibonacci line, the 2018-22 move at 123.80, the May 1985 low at 118.69, and the more recent lows of 2016 and 2022 down in the 114.09 zone. But these were all penetrated in 2022 when we had the V bottom. This still leaves target X below, a long way below, and one, as I've said earlier, that may take many years to achieve. There is one other feature I would like to discuss, but it is a tricky one. It is the bearish bow tie formation made around January 2023 from the then declining 2, 3 and 5 year moving averages, respectively currently at 126.27, 124.98 and 128.34. The theory on this is that markets initially move in the direction of the breakout of the bow tie, in this case lower. The second part being that between 15 to 20 sessions after crossover, we should see a move in the direction of the moving averages. Now this wasn't the best of crossovers, but I did say last year, and I quote, that such an inspired move will not happen till at least March to August 2024, end of quote. Well, we did have a dip lower in April, down towards what is now the dark blue lower bull channel line, but it certainly wasn't any ground shaking move, and so I think this pattern has been somewhat of a disappointment.
Thank you for watching and listening. This annual broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.